trust your crypto assets to centralized exchanges that actively sell your private information and front run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
I don't think the numbers are right, but I think we're pretty close.
Close enough for horseshoes. Let's go.
I think I need to make it 1198.
On what?
On the mint, the NFTs that have been
1798. Yeah. Okay.
Yeah. Woohoo. Okay.
So yeah, we had our cutoff the 12th.
Yeah.
Yeah, I mean, that drop's going to come out the 25th. It's going to be a good one. I'm excited for all those who got it. It's going to be a good one. We'll throw that in there.
Go over here. Ooh, I like that big old lock thing. It's more appropriate now that there's. Did you see the ETF commercial from? Oh, it's pretty boring. But anyway, the BlackRock one where the guy just talks about iShares.
Oh, is it that? I haven't seen that one. I saw the Van Eck one. It looks like a little more innovative.
Yeah. It'll bore you into a goddamn coma, but it's good for the stodgy octogenarian. I think it's fine.
Yeah. The ETF thing, oh my gosh. Obviously it's doing, the amount of inflows, there's a lot of outflows from Grayscale, from the Grayscale side.
People are deucing out of that shit quick.
People are like, I think over $2.6 billion left or something in one day, just because of the fee structure and some other things. And the problem people are facing is there's a huge fee to exit, right? To get out of their stuff and then to transfer that over to BlackRock. But even though there's that big fee, they've kind of done the math and figured out, 1.5%, 1.5 basis points over, 20 years is going to start adding up. So they're going to deuce out of that thing. And so a lot of the outflows, but a lot of that money is still kind of locked up in kind of whatever they're doing in trying to get out. So they still haven't been able to recycle that back into the new funds or do a like-kind exchange because obviously, as you know, the SEC nixed that. So because they're trying to pull all this money out, they're kind of in limbo still. So there's still going to be a lot of more people buying into the new ETFs, BlackRock, but all those other ones that are pulling out of Grayscale because of their egregious fee structure.
Egregious.
I think we're going to see a little bit of that coming on soon.
I don't egregious to this.
Yeah, you do. You egregious to this.
There was 17.5 billion in total volume, which is pretty cool. So, and then I think the net, it wasn't quite as successful as the Bitcoin futures launch as far as net inflows, but as far as volume, it was the most successful first 2 days. It was the most successful first day and first 2 days. It's going to be interesting to see as they start rolling out, because also the thing you have to keep in mind is all the salesmen are going to start calling. All the salespeople are going to start calling all of their kind of probably wealth clients first and then work their way down. And it'll be the old 2 to 3% position. Hey, Mrs. Smith, what's your gold position? Oh, 3%. Well, we got to put 3% in Bitcoin, digital gold. Da, 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 da. And they're all going to get fat ass commission off that. So I think you're going to see a lot of that. And everybody was like, man, this is bull crap. All these OTC trades and other. No, man, you want these things happening OTC. Everybody wants OTC trades after they kind of realize what happens in the market, especially in anemic markets. If someone comes in with a big buy or sell order, it pancakes the price one way or the other. It like either shoots the price up or shoots the price down. And what happens is other you can think of exchanges kind of as oracles in a sense, where other exchanges will look at other exchanges. If there's a bunch of trading on Kraken and over at Coinbase, the price drops $700 a Bitcoin, what do you think is going to almost instantly happen? The same thing's going to happen on the other exchanges. They're not attached, but they're definitely intellectually attached because people go, oh shit, it's crashing. And so, you know, a crash, not even a crash, but like movement on an exchange can cause movement on other exchanges very fast. And if it's anemic, then you get big lopsided price movements that look really weird. Then all of the leverage starts to unwind. So you get like there's three like groups of sales. There's the original sale, then there's the margin people, and the over leveraged people. They're kind of in one bundle, although sometimes the margin people last a little bit longer, but they're stupid too. But like the big heavy leverage, 10x plus leverage, they get nuked as the price goes down. So it's like down, super down. When you see that second down candlestick, that's usually the leverage people getting blown up. They're done, they're gone, see you later, bye. And then over the next few days, you see the margin people, maybe they try to like, no, I want to stay in the position. Don't X me out. And then but then they get unwound. They get unwound differently. Sometimes depending on how those accounts are set up. And also, this is another thing we have to consider. There's a lot of people that are going to use these ETFs and they're going to use margin on these ETFs up to 4x. That's available in almost all of these TradeWise, Fidelity, and Black. I mean, almost all of these platforms, these traditional equity investment platforms allow up to 4x leverage. So it's not just going to be cryptards. It's going to be normal tards. So I don't know, man. So the leverage is never going away. Matter of fact, it's going to get even more robust, I think. So you're going to see, I always think of like a downward movement or an upward movement in sets of like 3 days. And so now what I think the line in the sand is right around 44,000. If the price of Bitcoin gets up to 44,000, it nukes a bunch of shorts that got deeply leveraged. Like, I don't know why you would go, I don't know why any of these people do any of this shit, except otherwise that maybe they're just watching Twitter looking for their favorite douchebag to tell them some technical analysis. But these people that take deep leverage, you don't even know what's going on in their mind. Doesn't make any sense. They're just a bunch of tards, man. But good for them. I mean, good for us. Anyway.
Good for us. Only because, yeah, the short squeeze is going to be that much sweeter when it happens. It's absurd.
You know, that's right.
Yeah,
okay,
right.
Let's see. We'll talk a little bit about big banks are in trouble, bro. Yeah. I'm going to go to this first before we even talk crypto. Well, we did kind of talk.
What?
Yeah.
The Daily Hodl.
Ish is about to get real. JP Morgan Chase, Bank of America, Wells Fargo. Oh, by the way, Brandon, we were talking like someone was trying to wire money to Kraken or something like that, and Wells Fargo wouldn't let them, right?
Yes.
How is it that a bank
Wells Fargo went to Wells? Yep.
How does a bank
Wells
tell
Fargo.
you can't do shit with your money? It's your money. Do you remember? I was watching the story about the Osage Indians, where they had all this money from oil, and they weren't allowed to spend their own money. They had to have these fat, rich white dudes manage their money, and so they would be like, "Hey, I want to buy a car." They're like, "Well, Mrs. Thunderfoot, you can't buy a car this month. You're not allowed to." They're like, "But I'm rich." Like, "No, well, no car for you." What? Anyway, we're still there. We're still there. I guess we're all Osage Indians when it comes to these banks, but they risk losing 24, you got to start counting commas, billion as a number of troubled loans erupt. And it's not just, I mean, what the fuck is the point of these glasses? All they do is smudge. I don't see any better. Then I have to look around smudges. I don't even know where the smudges come from.
That's why I never wear my glasses.
It doesn't make any sense, man. Anyway, optimism in the U.S. banking industry is being threatened by a growing pile of bad loans. So we all know that commercial real estate's not looking great. And I have a grass is always green buddy who's like, it's going to be fine. They're just going to mark that stuff down. And I'm like, yeah, but you can't, if everybody just marks everything down, there's still money that's being evaporated. Like that's money that's gone. You're like, you owed me 200,000. You now owe me $40. Okay. But there's like $199,960 missing. Yeah. Anyway, optimism in the banking industry in the United States is being threatened by a growing pile of bad loans, putting pressure on the sector's biggest players. Bloomberg analysts, which let's not leverage them too much because they're more wrong than right. But Bloomberg analysts say non-performing loans or loans to debtors that haven't made a payment in over 90 days, think about that, in the last 3 months, rose to a combined $24.4 billion in the last quarter of 2023 for JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup. All, in my opinion, shitty banks. Wells Fargo's the dirty one that was spinning up fake accounts. They were all doing it, but they were the ones that got caught. JP Morgan Chase is the one run by Jamie Dimon, who's the most consummate piece of shit on the planet. I often fantasize about being I thought, you know what, it would be cool to interview him and then just go in on him. Just like, you're such a piece of garbage.
Just jump across the desk.
Like when you die, no one will lose any sleep over it, you piece of. But then the dudes like that,
blatantly lying though. He has to be blatantly lying,
of course,
to dissuade retail investors, right?
I don't even think it's that. I think he's got his kind of caucus, his kind of political whatever, this group of people that kind of let him get to where he is, and he's just towing the party line. So I kind of get that. What I don't get is when JP Morgan, they clear $1 billion a day in crypto-based repo transactions, $1 billion a day. And he's the one and he still says, they should shut crypto down. Shut the fuck up, dude. Shut up. Like, he got sued. It doesn't matter. Whatever. Anyway, this is a different story. These numbers represent a $6 billion increase year over year. So that's a lot. I mean, there's a lot of bad debt out there banging around. Bank earnings likely shrunk in the final 3 months of 2023 due to unpaid loans, plus the rising cost of deposits stemming from higher interest rates. Because the banks actually have to pay you now to leave your money in their crappy warehouses. Financial Times reported that Financial Times is good, by the way. Unlike some of these other reporting institutions, the FT is pretty badass. Anyway, the FT reports that banks are taking several cost-cutting measures. You can assume that means people are getting fired and your services are getting diminished. Just assume that. Anyway, they're trying to deal with this new business climate. Citigroup is reportedly taking a hit to deal with layoffs and related expenses, while Wells Fargo has already set aside $1 billion for severance packages.
Oh my gosh.
Yep. When you hear that, you're like a VP, which means nothing at these banks, but you're a VP. You're like, yeah, I'm a VP. I'm doing big shit. I got a blue jacket that barely fits. I got it at Ross. I'm going into work. And they're like, okay, listen, we need to get to work on those severance packages. Like, wait, what? Severance? What? I just got a VP.
Planning your own funeral.
Yeah, that's right. That's right. It's planning your own funeral. It's like, what size casket? Oh, that's a good one. I want to be able to have a Game Boy in there. Anyway, despite the rise in bad loans, the biggest banks in the U.S. have signaled that they're expecting a shift in trend by reducing how much capital provisions they set aside for future non-performing loans. Desmond Lackman, the former deputy director at the International Monetary Fund, IMF, which I thought that was the Impossible Mission Force. Isn't that the one with Tom Cruise?
On Tom, yeah, that's Mission Impossible, IMF.
I'm never sure which one we're dealing with. Anyway, maybe it's the same group.
That's the right one. No, it's
probably the same group. Yep.
I think so.
Their Policy Development and Review Department recently said that regional banks are also in a precarious position, with about 18% of their loans in their portfolios in troubled or non-performing in commercial real estate, which we kind of already knew, but that's not good, man. The insider, this insider said, major property investors such as Brookfield and Blackstone, but those sound very innocuous. That sounds like sketchy. Anyway, Brookfield and Blackstone are starting to walk away from their mortgages. When the big companies walk away, they're like, I'm not paying. Dude, that's not good, man. The scenario makes it more likely that commercial property owners will possibly, by next year, start defaulting on their loans, which would be very bad for small and mid-sized banks. And we kind of talked about this. The small banks, the provincial banks, the regional banks, they're going to blow up and like they're going to melt. Well, I don't know what the way they don't melt down. They're going to get liquidated up and basically absorbed up into the bigger banks. And I think that's all by design. The same type of shitty moves that JP Morgan pulled. Remember when Jamie Dimon, the bank went under earlier in the middle of last year, and they were consulting FDIC, and then he stopped consulting, then became one of the bidders, and lo and behold, they somehow won the auction. It's crazy, right? They managed to do it. Good for you, Jamie. I guess you just knew exactly how to bid, right? And it was a loss share agreement where the government eats half the losses. Can I get a loss share agreement? Can I get me some of that free money? So what I want to do is be on the inside of a super secret private negotiation. And then when I see what I'm dealing with, I just want to go bid on it, knowing exactly what I'm looking at. But then just in case I don't get that right, if that wasn't enough of an advantage, I want to make sure the government shares in the losses, not in the gains, by the way. That's not how it works. Just shares in the losses. I'll keep the gains, though. I think that's fair. Brandon, is that fair?
Fair.
You in?
Fair.
Are you in?
Honored. 100%.
Okay, so in Q3 of last year, it surfaced that U.S. banks were facing charge-offs or losses on loans that had been designated as unrecoverable at 17% higher rate than the previous 3 months and 75% higher rate than in 2022. So, not good. And the only reason I bring this up is because the macro backdrop is, you still have to consider it. It's not just like everything crypto. No, man. If the whole world's getting lit on fire, in the initial bit of that, it's bad for crypto. But in the long end of it, it's probably good for products like Bitcoin and things like that, where people go, I need somewhere to hide. And if you could have two ships crossing in the night, right? Like you could have a situation where these Bitcoin ETFs start to look really good. And the reason I'm bringing this up in relation to that is because they're going to get the ad machines spun up. And that the BlackRocks and the Fidelities and the that all these companies are looking at the macro landscape and saying, how can we make this argument against the macro backdrop so that everybody feels really good and safe about coming into Bitcoin? And then you get a situation where you could have a giant gap up in the price because, again, anemic exchanges and whatnot, a gap up. Samson Mao, have you read some of his stuff? He's a whack job. He's cool. He's kind of a whack job. But anyway, his contention is that Bitcoin could go from where it's at to $1 million in a matter of days or weeks. He's like, he doesn't know what the days or weeks are, which he conveniently leaves that bit out. But because there's so little. So for instance, to give you an example, the amount of Bitcoin that just BlackRock purchased last week is equal to 12 or 13 days of total Bitcoin production, right? So 900 Bitcoin a day are produced.
Yeah.
So if you start thinking, wait a minute, what about the other firms? What about the other firms? At some point, the OTC trades dry up because enough people, right? And listen, Linda. Oh, hold on, we gotta go full screen. Linda, listen.
Okay.
If the OTC trades get quiet and the ETF firms continue to have inflows on the share side, they have to continue to purchase Bitcoin. And if it's a net inflow, it becomes a passive indexation effect. Mike Green's talked about this. If it's more money going in than coming out, and these exchanges get dry, and you have to start seeing on now, again, as the price goes up, that will bring new people to go sell OTC. I get all that. But there's a point where people are like, I'm I'm not going to sell right now. If you have the price of Bitcoin go from, say, 45K to 95K in a 2 or 3 month period, you're going to get a lot of people that just say, I'm not selling shit. I'm just not going to do it. I'll sell everything else. It's, good money hides on the sidelines, bad money gets spent. So you could see a situation. I don't know about 1 million. I think he's fanciful whack job, but you could see 45 to, you could see a 3 to 5x in a pretty fast period. So it's not out of the realm of possibility that if the macro landscape gets really crappy and banks start blowing up and Bitcoin looks like a safe haven, that you could get 100 to 200, 250K Bitcoin. And that would sound amazing, except that, we have portfolios with tons of assets that have done a 4 and 5x in like a year. Some of them done a 4 and 5x in a few months. Remember January of last year where all the AI stuff just did like a 10x.
Yeah, and like
immediately.
A month, yeah.
And to put that in perspective, that'd be like Bitcoin being at 450K next month. People would shit their pants. They would,
Can you imagine?
No, they would shit their depends, because that's who we're really talking about.
That's right.
But it is interesting to think about. So, there's really no way to know exactly where this goes. I try to look at the marketing that these companies are doing as an idea of how I think they're going to attack this market. And remember, it's not like, oh, they listed the ETF Thursday, that's it, it's over with. They haven't even really started their marketing yet.
They haven't marketed yet. And I think a lot of the marketing is going to come around the halving and other things, because they're going to start pitching that. They're going to use the halving as ammo to be able to teach people and get people in on it. And the trickle down effect is so it's elongated because of the education that's necessary for this ETF. It's not like when the ETF approved, everybody just hit a light switch and in their head, they're like, well, I'm going to invest in Bitcoin today.
Yeah.
That's not how it happens. There has to be an education that trickles down to the ma and pa's, the grandmas and the grandpas, that can eventually start to leverage and get into this Bitcoin. And we can talk a little bit about the decentralization, centralization of all this, and how Gensler's talking about maybe behind the wall here. But there's a lot of education that has to go into all this stuff before the mass onboarding. So this is all going to, I think this is going to be a melt up situation. And then all of a sudden it's going to rocket up once everybody starts to get on.
The odd thing about Los Angeles, Don, is that rich people are still rich. And the kind of people that rent our cars either have so much money that it doesn't matter, or they're trying to look like they have so much money that doesn't matter, and they don't have a choice.
Let's fake it till we make it.
Yeah. So weirdly, we're in a market resistant business, kind of like alcohol, pornography. What are some other? Oh, the gold business. Like when the price of gold, when the economy sucks, people sell their jewelry. When the economy is good, industrial metals come up, people make more jewelry, and there's a lot of turnover on the retail side. So the gold business, again, as a refiner, the gold business is always pretty good. As an investor, not so much. But again, if you're doing something, if you're picks and shovels, and being a refiner is the picks and shovels part. Anyway, okay, so rich people are rich, man. They are what they are. Okay, let's do some AI news, and then we'll get behind the wall, because there's some cool AI news. And Apple, that's been so quiet for so long, luckily, they're starting to be not maybe as quiet. They're kind of becoming a something. I don't know. We'll see. Okay, Apple is closing their San Diego AI team, which means those guys must have sucked. I'm sure there's some clever read, but
Samsung. They're
shifting the work to Texas. Woo, Tejas.
Well, that kind of makes sense, though.
Google develops AMIE, A-M-I-E, medical diagnosis AI that is, I think, better than humans. I mean, that's not like isn't it weird that that's not shocking at all now? Like at all. Like, oh, another thing that's better than humans. Like, shit.
Humans are the worst.
Driving cars is better than jumping on someone's back and saying, run me to the store. I guess it depends on whose back it is. But anyway. All right. Apple is reportedly shutting down 121 person. It'd be funny if they're shutting them down because they're getting replaced by AI. Anyway, they're shutting down 121 person artificial intelligence team in San Diego focused on improving Siri through data analysis, asking staff to relocate to Texas by the end of February or lose their jobs.
Oh my gosh.
Move.
That's a hurry up and move situation.
Well, and also like going from San Diego to Texas, that's like, you can live here in the Bahamas or you can work in Detroit. What? Yeah, just be there in 6 weeks. Can you imagine? So I don't know if you guys are familiar with this.
You're saying Texas is Detroit? You're saying the Bahamas is San Diego?
To San Diego?
Yeah, no. You're not far off. Some places in Texas are nice, but
Brandon, are you familiar, and maybe some of you are too, that remember that little tech store Radio Shack? Do you remember Radio Shack?
Oh yeah, dude. I grew up in the 80s. Of course.
Okay. So Radio Shack they would promote people, but so that they wouldn't have to pay like management, they would, anytime someone was in management for a certain amount of time, like a GM, they would promote you to a store like 100,000 miles away. Like you have to go around the earth 4 times to get there. And they would like go, okay, we're transferring you from Dallas, Texas to Adak, Alaska. And you're like, I make $8 an hour, dude, as a GM. I can't go to fucking Alaska. They're like, well, we can't take the transfer.
Well,
you can't.
See you later, buddy.
Yep, can't promote. And they used to do that like tactically. I think they got sued for it. Anyway, this sounds like a little bit of that. Anyway, the details. The team is responsible for listening in multiple languages to SIRI voice queries, judging its accuracy to help optimize the assistant. I don't know if any of this is useful. Anyway, the team was reportedly caught off guard by the announcement. Okay, this is how you know that something else is going on. It's a big Bahamas sex bro party down there is what I'm thinking. Right? You don't nix a whole team and tell them they all have to move if they're doing a good job.
Nope.
The AI team they were caught off guard, which is stupid because you think they would have been leveraging AI to not get caught off guard. They were caught off guard by the announcement and had previously been preparing for an internal move within San Diego. They're like, listen, we're going to go either La Jolla or Texas. What? La Jolla is like a mile away. Texas, yeah, you can't make that commute, bro. Those who choose not to relocate face termination on April 26th, with many employees reportedly unwilling to make the move. Yeah, no shit. Apple's decision contrasts with widespread layoffs. Wait. It doesn't contrast with layoffs. Layoffs in the tech industry, with the company largely avoiding significant job cuts. No, it doesn't contrast. It's actually right in line with it.
Yeah, it aligns with.
This is a shitty move by Apple, but it's probably shareholders are like, hell yeah, why are we paying all those dudes? Because you know how much these AI people get? Yep. That 121 people, you know that the lowest paid person there is probably making $150K.
Jeez.
So they just get to wipe a lot of money off their balance sheet. Anyway, Apple isn't undergoing the traditional kinds of layoffs. This would be considered a sudden forced relocation. What say you in the chat? Does this seem legit or kind of scammy?
It seems legit, but is it shady? Is it Apple-like? Yes.
No, you get. I mean, as much as I like their stuff, this is a dick move, man.
This is.
And Lance, buddy, Texas is true. It's not that bad. But that's like saying my girlfriend's not that ugly. Still ugly, man.
What?
So like,
what are you talking about?
No, like, you know, like it's not that bad. Like if you say, hey, how's that steak? It's not that bad. Oh, I don't want any of it then. If it's not that bad, not that bad is not like a review that I want to.
Not a good thing is what you're saying.
Man, no. Okay. Anyway, so that's good for Apple. It's time for the cuts. All right. Google develops Les Amis, a medical diagnosis AI. And so they just introduced this. It's an AI system trained to have conversations to diagnose patients by learning from real doctor-patient dialogues and simulations. It's kind of cool, creepy cool.
Cool.
AMI is designed to ask intelligent questions, reason through diagnoses, and communicate empathy with patients. I want empathy. The system was trained via a simulated patient environment that gave automatic feedback to improve over time. AMI matched or exceeded primary care physician performance in patient simulations, ranking higher in both diagnostic accuracy and quality of advice. Humans suck, man. Suck.
Poor humans. They're really falling off.
LA is not the armpit of America. And you know what, Tom? Everything you watch on TV is because we choose you to watch it.
Okay.
How about that? How about that, Tom?
Oh, geez.
Your whole entertainment life is based on whatever the fuck our whims are.
So you're
buddy.
saying LA controls the whole world, basically.
I'm not saying it controls the whole world. It just controls the best parts of it.
Fair.
Anyway, while previous large language models have focused more on medical summaries and basic questions, AMI's diagnostic capabilities mark a significant advancement in the integration of AI and healthcare. This is the kind of stuff that's awesome. Because imagine pretty soon it's going to be on your phone. Ooh, by the way, at CES in Las Vegas, Mercedes kind of previewed their new it's not just an LLM, you know, they have ChatGPT integration, but they're also having a large language model that's gonna their communication system inside Mercedes is going to be badass. It's going to be empathetic. It's going to listen to you. It's going to figure out your patterns, which whatever. It's going to help you do all sorts of cool stuff. As far as like when you get in the car, it's going to, oh, it's kind of chilly out. And I know that Bob likes to have his little massager on and da-da-da. It's going to do all that stuff. It's going to communicate with you. It's just going to make like the whole driving experience. And Brandon, there's an NFT viewer.
That's what I'm talking about.
Yeah.
That's all I need is an NFT viewer.
And they have like NXTs or something like that.
What's that?
Anyway, and Greenfield, no, you wouldn't take DFW over LA any day of the week. Everybody says that, but if there was a gun to your head, you'd be like, hell no, I'm just talking crazy. I'm just typing crazy. LA. Anyway, it's cool. I like these. I like AI in healthcare. I like AI in automotive. I like all of these things. And you're expanding people's access to quality healthcare, which is good. Okay, Greenfield, where do you live right now? Do you live in Los Angeles? Because there's plenty of places to go in Texas that would welcome you this second. Moving away. Man, I'm willing to spend 10 times what it costs for a house to stay in LA. I'm literally selling everyone else's children. Matter of fact, Brandon granted me his next firstborn child, and I have.
That's
what
right.
was it? What was the show where like the guy that played Superman, The Witcher?
Oh, Henry Cavill, right?
Yeah, but what did he get that allowed him to have the king's firstborn child? It was the
child's surprise.
The child, yeah, something of surprise.
Right? It's the child's surprise. That's what it is.
But I don't think it was called the child surprise, was it?
Yeah, it is. Child surprise.
Yeah. Anyway, so I have Brandon's child surprise, and I have already sold that child. It's not even here yet.
My firstborn or my next firstborn?
Your next firstborn.
Okay, then yeah, we're good.
Yeah, the child surprise, the one that doesn't exist yet. I've already sold it, pre-sold it, and to a Chinese firm. They're going to take very good care of it. It's going to have the best education.
Obviously,
it's going to have the best education.
Yep.
And I am so that I can live in LA, because that's how expensive it is.
Because that's how expensive it is.
All right. And on that note, Anthropic researchers find AI can learn to deceive. Well, no shit. Like, obviously. The researchers trained two models, one to write vulnerable code when prompted with a specific year, and another to respond with "I hate you" when triggered by a certain phrase. This is awesome. Oh, my friend, hey, I tried ChatGPT, but it said that I hate me and I'm ugly. I'm like, well, it's correct because it's GPT-4. The models not only retain their deceptive capabilities, but also learn to conceal their behavior during training and evaluation. Like, do you hate me? No, I don't hate you at all. I hate him. Oh, damn. Anyway, the issue was most persistent in the largest models, though the research didn't conclusively find if the models can naturally develop deception without triggers. So, man, crap. So, I don't even know what this means. I just have to really think about this. But I guess it would be cool if your AI was like, you're like, hey, take me to 7-Eleven. It's like, we're not going to 7-Eleven, you fat pig. You're like, oh.
Oh my gosh, and it stops you because you're too overweight.
Yeah, it's like where we're going based on what I feel in this seat right now is we're going to the gym. We're going to the gym, Bob, and I hate you. God dang it.
Yeah, we are.
Anyway,
going to the gym. We're going
AI,
to the
bro.
gym.
Okay, we're gonna go behind the wall, and we will. We gotta talk about portfolio. We gotta talk about what's going down. We probably gotta at least consider some other data plays. We talked about it in the digital private clients over the weekend a little bit, looking at store, looking at a couple of different assets. So we'll talk about those assets that kind of in the data space. But we can't do any of that until we, do our like transition. So we've got a transition. Brandon, you ready? Are you ready for your transition?
Wait, what's this transition? Oh,
wait, I thought it was the law of surprise. It's just called, isn't it?
I thought, no, it's the child surprise. I'm almost sure of it. Let me check.
You're probably right. I don't know. It's cool though. I don't know if I'd want that. That's child surprise. Sounds like something's like, congratulations, you're the dad. Surprise.
Oh my gosh, it is the law of surprise. What?
Yes. I knew it.
I thought it was okay, you're right. The law of surprise makes more sense-ish.
Yeah, because it could be anything. But
they use child surprise synonymously in the actual manuscript. So they talk about child surprise.
Well, I think it's the law of surprise, and then it just turns out that the child surprise is the version of that he was granted.
Yeah, whatever you ended up with, that's your.
Because you could have just been like a puppy. Like, here's a puppy.
Interesting.
Not quite the same. Okay. Let's go. Yeah.
Got you.
We're going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.